Welcome to my live market meeting, 2nd September 2020. I hope you are able to hear me and see my screen. Hi Rick, good morning. Thank you. You are all on unmute. You may ask any question at any time on Zoom. Let me continue. I am Sagar Nandi. I used to work in IT. I have retired now, swing trading stocks using the Q systems and techniques. This is my traders forum, sagarnandi.com. Okay, there is some. Not sure why some echo is coming, but let me continue. My email ID is tradingprofitably@gmail.com. This is my YouTube channel and my Twitter page. I regularly share live market and stock analysis on these channels. They are open to the public and you are most welcome to make use of them. Disclaimer. I am not an investment advisor. This demonstration is for educational purposes only. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. This is a live session. I have not prepared for it. I will analyze it using the Q systems, analyze the market and stocks, etc. using Q systems. I will use Q Elite and Q Global for technical analysis, Q Vital for fundamental analysis, Q Edge for sector industry rotation, and Q Index for market level index analysis. I'm going to use the development versions of these programs, especially the Zenith based tools. They may have some enhancements compared to the version you have now. I'll try to release the latest versions as soon as I can, maybe in next 1 week, 1 or 2 weeks. That was the last slide of my presentation. Let's have a look at the global markets. Starting with Australian market, AXJO. It was inside a range and that is continuing. As you may see, 1 day ago, AXJO fell sharply and it precisely stopped at the memory support line and then it went up sharply today. Yesterday, it had extreme bullish pressure. Sorry, not bullish. Yesterday, it had extreme bearish pressure and today it has extreme bullish pressure resulting in a pressure U-turn. Once again, if you kept an eye on the memory support line and the fact that price stopped there yesterday, today in the morning session, you could keep an eye on AXJO and try to take a long trade using fine-tuned intraday chart. Let's look at Japanese market, TOPX. This was inside a triangle pattern and that is continuing. The triangle is becoming narrower and narrower. The technical analysis theory says that if price breaks out before it comes to the tip of the triangle, then the breakout is more significant. However, if price gradually rolls to the tip of the triangle and then breaks out, then the force behind the breakout may not be so much. If you accept that theory, then you may not take any breakout trade from this triangle pattern now. Instead, wait for it to give a swing low or swing high. Swing low if it breaks to the upside, swing high if it breaks to the downside, and then try to take a swing trade. China market CSI 300. You remember in previous several sessions, all the global markets except the Indian market was in a range. And so far we are seeing that is continuing. China market CSI 300 is also inside a range. If you step back to this area, it is inside a range. However, the lows of the weekly candles are going up. That doesn't tell us that it will decisively break out of the upper edge, that is the watermark resistance. We have to wait for that. And under such circumstances, again, I prefer for price to break out decisively, come back down little bit and go up again, giving me a low risk entry point. For now, I will conclude that for swing trading purpose, Chinese market CSI 300 is also inside the range. India market Nifty index. This was in an uptrend and that is continuing. The backdrop color had changed to yellow, but that is fine. It is continuing to be in an uptrend. In the daily chart, 2 days ago, it had a sharp reversal. Extreme bearish pressure and also a reversal candle at price extreme high when the pendulum dot changed from green to yellow. This reversal was caused by the GDP economic news that came out showing that the GDP contracted a lot by huge percentage. Still, as you may see, not unlike many other markets, the economic data and the markets may not move in sync. If you try to trade based on economic data, you would probably not go long during this period because the economic data, jobless data, etc., were all weak during this period, during the COVID virus spread. India COVID situation is pretty grim now. I think it is now the worst affected country in the world, but you can see the market doesn't seem to care. It is going up in an uptrend. The last global market that we study is FTSE market for UK.FTSE. It was inside a range and you may say it is at the lower edge of the range. It is doing now what it did several weeks ago. Several weeks ago, it tried to break below the lower edge of the range, below the watermark support, and then immediately reversed with a bull release signal. The same thing happened again. Yesterday, it tried to break below the watermark support, and today it reversed with a bull release signal. Therefore, it is continuing to be inside a range. Isn't it amazing how all the global markets except India are inside a range? India is defying the global trend, and of course USA market is defying it very much. For in USA market, let's use Q Elite on trade station, starting with the S&P 500 ETF SPY. Very bullish, no doubt about it. Backdrop is bullish. Yesterday had a bullish flow. It's at price extreme high in weekly and daily, but it is continuing to go up. In the last weekend market roundup, I mentioned that my market outlook and preferred trading direction both were bullish, and that seems to be playing out nicely. Let's look at the other market ETFs, QQQ. Continuing to remain the strongest of the market ETFs. The relative performance, this dotted copper color line, is continuing to tilt up. Very bullish indeed. DIA, it's lagging the broad market, shown by the relative performance tilting down. However, it is also going up. Weekly candle shape is bullish, and in daily, it gave a bullish flow candle yesterday. Once again, 2 days ago, it closed just above the memory support, and yesterday it went up from there. Therefore, if you were watching DIA using real-time fine-tune chart yesterday, you could try to take a day trade using fine-tune chart. Let's see if such an opportunity was there. This is DIA using fine-tune chart. Yesterday, price opened at this point that was below the red pivot line. Blue pivot line is current day's open, red pivot is yesterday's low. Therefore, it opened with a very small gap down move. After that, early range high and low lines formed. This was happening when price was at the daily memory trend line support. When price closed above the early range high, somewhere there you could take a long position, putting stop just below early range low. This should be the risk distance. When price went up to the dynamically drawn pause pivot level, the risk distance was covered. You could exit partial at least, or maybe full position, up to you, of the day trade. And if you continue to hold the remaining position of the day trade, you could close that at the end of the day with an even larger profit. This is again showing that you may use the weekly, daily memory support to enter a precise trade using fine-tune chart. This is a very useful technique, precision entry technique, and you may practice it on simulation for a while before trying it out. Now, one thing to be noted that DIA reversed at memory support. The question is, yesterday, if you were going to take a long position in any of the market ETFs, could you trade DIA? Yes, certainly. That was a valid gap long day trade also, and that was also a long trade based on daily support, daily memory support. However, there are 4 market ETFs, and during market hours, you may keep an eye on them. You can see DIA broke out of the early range high at this point. Let's align all the, not that one, not that one. The point when DIA broke out of early range high, IWM also broke out at that time. QQQ didn't break out yet, and SPY also broke out. What I was trying to see is that did QQQ break out earlier with more bullish pattern? That was not true. Though Over longer period on weekly daily charts, QQQ is the strongest. For this day trading purpose, we started with DIA because DIA had a daily memory support. However, at the time of entry, because it is a market ETF, we would also keep an eye on the other market ETFs. And in this case, it seems that DIA again would be the choice. It could be IWM also. However, DIA had memory support. That was additional reason to take the long in DIA and not in IWM. I would not try that in QQQ yesterday because it broke out of early range high later, and SPY broke out of early range at the same time, but you can see it closed just above the early range high, while DIA closed significantly above early range high. Also, DIA had the daily memory support. Did IWM have memory support? Let's see. IWM also had a daily memory support. It nicely reversed from there. However, it also has a daily memory resistance and also a weekly memory resistance. Therefore, if we were going to take a day trade in one of the market ETFs yesterday using this analysis, it shows the right instrument would have been DIA. IWM is less bullish than the others. This is one ETF where the backdrop is continuing to be neutral, yellow color, and this is the only one which has memory resistance in daily. If the market reverses, it seems IWM will give the best shorting opportunity. If it happens, that has not happened yet. The ETFs are clearly bullish. Let's look at the sectors using Q Edge. Yesterday, market was bullish, not very bullish, but bullish. 64% of the sectors were up, 72% of industries and 63% of S&P 1500 stocks were up. That is a change, improvement from the 2 days period. 2 days period was more bearish. Therefore, Tuesday was bullish overall. That was yesterday. However, this week so far is continuing to be more bearish than bullish. 2 days means Monday and Tuesday. Over 5 days, it is balanced. Let's see what is the insight from Q Finder. This is Q Finder weekly. Q Finder weekly, if we look at all signals, continuation signals, reversal signals, it is continuing to be slightly more bearish than bullish. Strength signals are more bullish. That is because of the large number of gap ups on Monday. Q Edge was showing a mixed picture and Finder weekly is showing a bearish picture. Finder weekly in this case means up to Tuesday. Today is Wednesday, pre-market open. And if we look at yesterday's Finder, we saw Q Edge was showing bullishness yesterday, and that is true from Finder also. All signal, continuation signals, reversal signals, all were bullish. Strength was bearish. That is because of a large number of gap down opens. We can see one thing instantly from the Q Finder weekly. We see there were large number of gap up at the open on Monday. And from yesterday's finder, we can see there were a large number of gap downs. From the weekly, we can see that though there were gap ups at the open, afterwards it became bearish. And Q finder daily is showing though there were many gap downs at the open yesterday, afterwards it became slightly more bullish than bearish. The Q finder charts in a unique way show us what is going on, and then we may make a decision on whether to take new trades in the long direction or short direction, or if it is showing mixed signals when we combine the insights from market ETFs, Q finder and Q edge, the best approach may be to stand aside. I didn't analyze this data earlier. From what I am seeing, it seems it is better to wait to see what the market is doing. Of course, the leading stocks are continuing to go up strongly. Let's see, I have the radar or sonar. This will do. Usually I like the radar to be on the left side, but this will do. So far, you can see from the radar in the weekly interval, all the market ETFs are up. QQQ is up the most by far, 2.5%. DIA is up the least, 0.3%. And if we see yesterday, again QQQ is up the most, 1.7%. DIA is up the least. Therefore, both over the weekly interval as well as daily interval, currently DIA is underperforming and QQQ is the best performer. Let's look at oil and gold. I can see the instruments here. USO continuing to be inside an extremely narrow range. In the overnight market, I can see it is up by 0.4%. However, still it is going to be inside that range. I will avoid taking any directional trade unless it breaks out, then creates a higher low, or breaks to the downside, creates a lower high. Gold. Earlier, I suggested taking a short looking at the bearish headwind signal. The short could be initiated next day because the headwind candle had a lower tail. Then when price came near the daily and weekly memory support, I mentioned that it was likely to go up from there. Up to which distance? There was a memory resistance in the daily. Let's change the template. I'm using Control Shift M, M for memory line. It will show the historical support resistant trend lines that are now broken. Price came to this memory resistance and stop. That is why it is always useful to keep an eye on the memory support and resistance. If you are looking for a buying opportunity and the instrument is near memory resistance, better to wait until the resistance is broken. And when the resistance is broken, that is also significant. That may be used to take a breakout trade. Now let's look at the leading stocks. Yesterday, Tesla came down by 4.6%. All the other leading stocks went up. Netflix went up by 5.1%, and Apple, $2 trillion company, once again went up by 3.9, almost 4%. Amazing. Why Tesla came down is not important. It may be because they wanted to raise more capital from the market, few $billion. But that one day's coming down doesn't change the uptrend at all. It is in an uptrend very clearly, and we may say too sharp to be sustainable. After all, it is a company, it's not a rocket. It's a company. A company cannot keep on performing at this pace forever, especially when the stock is already so expensive. After the stock split, it is continuing to go up. At some point, it will stop. I think its price movement, stock price movement is, to me, it may be impossible to be sustainable. But that doesn't mean I'm going to take any short trade in Tesla. There is no trade setup using Q technique. I'm not going to take short, certainly. And as I mentioned earlier also, if I'm looking for shorts, there are many weaker stocks. I will try to avoid FANG stocks for shorting. Netflix, the one that went up by maximum percentage, interestingly, again, it came to this daily and weekly memory support lines and stopped there. Those of you who are okay to trade $400, $500 stocks, you could buy the Netflix right at the point it was starting to go up from the memory support line. One point could be this candle, the small cyan color candle, when it gave a bullish flow candle. That would be a nice buying opportunity. The stop was very narrow at that point, this cyan color candle. After that, it has gone up sharply. Once again, you could use the memory support in weekly, daily, in this case, to take a very low risk entry opportunity. In an uptrend, no doubt, Apple, another leading stock, very sharply going up, very sharply, bullish indeed. Google, also going up. There is memory support in weekly, daily also has memory support. Amazon, the same thing, has memory support. Microsoft, again, in an uptrend, also has memory support. And Facebook, in an uptrend again, has memory support. As I mentioned earlier, even if these stocks drop, I mentioned it several weeks ago also, that even if these stocks pull back a little bit, they will not turn into a downtrend anytime soon. Unlikely, because of the memory supports being in all of them. And because the leading stocks, these mega cap stocks, are holding the market up, it is unlikely that the market will suddenly turn bearish. Not to mention that the market ETFs are also all having memory support, even IWM, which has memory resistance also, but that also has memory support. That's why it's difficult to profit a lot from this market using short trades, bearish trades. It's safer to take long trades. I took one short trade in the home building ETF. I mentioned it earlier, XHB. I used vertical. I used the bearish headwind signal in the daily chart, and I think the weekly was yellow or about to turned to yellow. I don't remember. We may check out the forum post. I took a bearish trade using vertical. I'm continuing to hold the trade. CUBI, I took a long position, regional bank stock. Looking at the weekly and daily memory trendline support. I discussed it on this day that it could bounce from the memory support, and I took a long trade next day using fine-tuned chart. It is holding the memory support. I have no reason to exit it. If it goes up and hits the memory resistance, I'll keep an eye on it. CUBI is in regional banks industry. Let's check that out. The fundamentals were very strong. Why don't we start with Q Vital? Retrieving the data, it signed in and retrieved the data. Let's check the industry while it is retrieving the peers. I was waiting for the industry to turn up. We saw in the stock, it has memory support. And when I discussed it in earlier webinar, I showed that many of the regional banks had memory support. Although supports may still be holding, or most of them may still be holding, that was one reason for me to look for the long trades in regional banks. If the memories held and price went up, then I was expecting that the regional banks industry will also go up. That has not happened. It is holding memory support, but it has not gone up much. The moment it goes up, the regional banks industry color will change to cyan and stay cyan, hopefully. And the fundamentals were very strong. It is still retrieving. No problem. Today I noticed my system is a little bit slow, but no problem. While it is retrieving the Q vital statistics for CUBI, let's check out KRE. KRE also has memory support in weekly and daily, and those supports are still holding. Like CUBI, KRE also has memory resistance. If these resistances are broken, then I think almost certainly the regional banks industry will change color. The scorecard will change color in QH to cyan. And CUBI, of course, it was a star candidate. That is great valuation, nice earnings growth in the last quarter, also a short squeeze potential. And I saw earlier the revenue growth was also steady in all the previous 3 yearly periods as well as previous 3 quarterly periods. That is why I chose CUBI. Now, yesterday I mentioned a stock on Twitter. I didn't share it on the forum. I mentioned it on Twitter, twitter.com Sagarnandi. That was on a stock KIM. You may find a similar pattern to CUBI. It also has nice memory support in weekly and daily both. Interestingly, once again, the bullish headwind could catch the very bottom. If one took a short trade at this point, which would be a go with flow short setup based on the magenta candle when the stock was in a downtrend, when the bearish headwind came, one would be careful and protect the remaining position using a trailing stop. If the checklist conditions were met, one could take a headwind reversal long trade also at that point. If the checklist conditions were not met, at minimum, the short positions would be protected. And then when the next buying opportunity came, one could take the long position. I noted that there is a memory resistance, therefore one may wait. It had a reversal, bullish reversal candle yesterday when I shared it. That was 12:30 p.m. New York time. Let's see how the stock ended. KIM ended yesterday. It still has the reversal candle, that is a bullish sign. It closed little bit lower than when I shared the snapshot. It has an upper tail now, but overall the shape is still bullish. In weekly, it is breaking above the memory resistance. If the daily memory resistance can break, that may give a breakout long opportunity, because I can see there are two successive reversal candles at memory support. That is a bullish sign. Of course, it's safer to wait for the memory to be broken and take a breakout trend. Weekly is broken, but the week is not complete yet. Why I analyzed KIM is its industry is in a similar stage as the regional banks. In which industry I analyze CUBI. If we look at KIM, let's look at the similarities between KIM and CUBI. Let's check KIM's fundamentals. KIM. KIM is a common name in Korea, both North and South Koreas. But this is not that KIM. This is Kimco Realty Corp. The ticker symbol happens to be KIM KIM. Yeah. Now you can see the similarity in terms of Q fundamental scorecard, similarities between KIM and KUBI. KIM is also undervalued. It has excellent earnings growth in the last quarter and also has a short squeeze potential. Fundamentally, they are similar. KIM is also a star candidate. And if I look at the industry using QH, its industry is also in a similar stage. It is weak for a long period of time. Magenta color all throughout. Not so different from regional banks industry. If multiple stocks in this industry goes up, then retail rates will turn up also and change color to cyan. In this way, you may look for fundamentally strong stocks. Preferably, for me, I prefer both undervalued and having nice earnings growth, and then start to nibble at them, start to buy them at memory support. Those are going to give very low risk opportunities. And right now, you may see that the earnings growth is there for 1 quarter. If it continues to have more and more earnings growth in subsequent quarters, it will continue to go up, and eventually it will come into the radar of IBD traders and other high growth stock traders. But one might start taking a long trade in such stocks that are undervalued and starting to display earnings growth. Let me also show one more stock, Zoom. And let me analyze its fundamentals also. Zoom had earnings and it shoot up yesterday. Very large gap up move. Now notice the earnings dates on the weekly chart. Earnings weeks. Here is one earnings, here is one earnings, here is one, and yesterday was one earnings. Now, if you look back, where did the earnings growth start? Was it here? Doesn't seem so. Was it here? Probably yes. Probably yes. Of course, we cannot decide that from the chart. We have to see the fundamentals, actual fundamental earnings data, because stocks sometimes may go down even if earnings growth is there. Earnings growth is not the only reason for a stock to go up. But it seems if we accept that stock is going up only because of earnings growth, at least for Zoom, then from the weekly chart, it seems this was a nice positive earnings growth story from this point onward. You could buy now also, but the technique that I discussed, you may start to nibble, take a position in a stock, anticipating that it may end up being high growth stock later. Nobody knows for sure in the end whether it will have consistent earnings growth, high earnings growth quarter after quarter. Nobody knows. Is an attempt to do so. Now let's look at Zoom's fundamentals now using Vital. Application software industry. The industry is strong and it has been strong for a while. Currently, it is overvalued. That is fine. It has, you can see, excellent earnings growth in the current quarter and in the previous quarter also. Prior to that, no data. Maybe it didn't have any earnings at that time. So for 2 quarters, it has excellent earnings growth. 2 quarters. And revenue growth also. Now again, go back to the chart. 2 quarters. So it could be this quarter. Could be. So if you look at the chart like that, then it seems, at least from this one single study, which is never enough to make a conclusion, it seems it is possible to track a stock, wait for it to have first robust positive high earnings growth, pull back little bit, and the moment it starts to go up, buy the stock at that point. So we need few factors. One is to have high positive earnings growth, then for the stock to pull back, and that quarter's earnings growth will be a quarter prior to which the stock was not going up much. If you can find a stock like that, then you may be able to be in the trend much ahead of others. You could buy the stock at around this price, which would be around 110, 120, and now it is 457. It may still go up, but if you consider this to be a reasonable approach, you may look for stocks that are at extreme low price point. How to look for them? We may look for stocks at price extreme low. I don't know we'll find any stock like that or not. Let's see. In Q Finder, let's go to the stocks that went up yesterday and try to find stocks at price extreme low. There are few stocks. I'm putting my cursor on this symbol column header and click the peer analysis button. So these are at price extreme low. They went up yesterday because they were in the bullish tab in Q Finder. They had some kind of Q bullish signal. And now I am going to see their earnings growth pattern. You can double click on the last quarter earnings growth and I can see NFBK is the one in this list that has the best earnings growth. It is undervalued also. Thrifts and mortgage finance. Let's check out this stock. I'm getting a complete peer analysis of NFBK. And while it is retrieving Q scorecard fundamentals, I can check out the industry. It's related to banking, finance, etc. The industry is also weak, similar to regional banks. And if I go back to Q Vital, retrieving data from definitive, it is a star fundamental buy candidate. Great valuation, has considerable earnings growth. At least yesterday the industry was strong, though relatively from Q edge we saw that it is magenta color. If you see over a longer period, you can see the magenta color is less deep. So it is improving, but relatively it is still very weak. If I look at the industry percentage, I can see that yes, indeed it went up yesterday. If the up move continues for some more periods, then I expect the scorecard to turn cyan. So this could be a stock at price extreme low starting to display earnings growth. This could be a stock like what Zoom was at this point. Could be. Of course, there is a big difference. Zoom is a technology stock. Technology stocks can be high growth stocks much more easily than banking stocks and certainly real estate stocks like KIM. They cannot be, usually they are not so high growth stocks as tech stocks. So that we have to keep in mind. However, this technique that I described, you may apply to tech stocks also. You may create a list of tech stocks and it is easy to create that. You can do that in QEdge or QVital. In QA, you may come to the sector score, click on infotech sector and drill down. When you drill down to the industries, you automatically have all the technology stocks in the stock tab. So this is an easy way to create a list of technology stocks. And then you may look for stocks at very low price that are also having high earnings growth. And then see if they are giving a buy setup. That same technique you could apply to this stock NFBK. Let's check it out on technical charts. NFBK, Northfield Bangkok. It may also be a banking kind of stock or finance stock. NFBK. Not very different from CUBI. It is also a star candidate. It is at a support. It is also inside the triangle pattern at watermark support also. Had a bullish headwind at that point. Weekly is also holding steady at this price level. We can see this stock dropped a lot. Therefore, it is not unrealistic to expect that if it goes up, it may go up at least to this yellow direction line or this white direction line. And after that, if it continues to go up, the next target will be the memory resistance in weekly, which is at the same level as the memory resistance in daily. This is one technique you may use to hunt for stocks that may end up being high growth, or at least if not very high growth, at least it will recover significantly. And they are very low risk price level. If you think back, you could apply the same technique to buy Zoom at this point. When the earnings growth picked up, then wait for the stock to pull back a little bit and go up. You could also buy at current price level, price extreme high. However, I prefer the former approach. Usually I avoid buying myself or discussing penny stocks, but I found this stock earlier and I mentioned about it, SYN. This was the stock that was 150 here, 2015. The high was 151.2. Now it fell down. I identified it when it firstly went up here, turned into an uptrend from earlier downtrend. From the uptrend, it pulled back and then regained the yellow direction line. Very low price stock, around 55 cents at that time, and I had taken a position at that time to see what it does. It has gone up. It already has large profit in terms of percentage. If you say it is a large profit, but I am just holding on to the stock. No, in no hurry. It's a small amount I have put in the stock to see what it does. And if it becomes even a $5 stock, I'll be very happy, from 50 cents to $5. But I have put some money in this stock and just holding it. It's a biotech. And if you see Q Vital, let's check it out. You might have done that earlier. These are not stocks I know of. So I look at the business description when I invest in any stock, trade any stock. If I don't know about the stock, I look at the description and I saw it has a large number of stocks. It's in gastrointestinal treatment, and it has a number of trials, phase 3, not one I saw. This is one, Ribaxames. This is, I think, another one. Several phase 3 trials and several phase 2 trials. And I had done some more searching. It seems insiders are buying. By the way, insiders are buying has no correlation with the stock going up. So I didn't buy the stock because insiders are buying. I bought it because on Q analysis, it had enough signals for me to buy it. So these are few stocks I discussed earlier and I reviewed them. Now, are there good buying candidates now? Would you have any stock that you want to share that you have bought recently or you are planning to buy? We have few more minutes. If not, let me Toku. Thanks, Rick. Toku is a strong stock, and these are the stocks we know about, so we don't have to look at the business description. It's a high growth stock and very nice job. Very nice job, Rick. Good job. And this is an example of stock like Zoom. And as I mentioned, it is possible to buy at the high price also. Certainly possible, and it broke out of the sideways range with very bullish pressure, very high activity. In the overnight market, it is up again by 7.5%. So very nice choice. What was the time to buy it? If I was using the Q technique, I could wait for the price to come back to this memory support and maybe buy on this cyan candle or this cyan candle around that time. Why it went up? Was it because of earnings? Let's check the news. Not link. Toku news. Okay, it went up because of Zoom earnings. That's good. They have a nice product. Let's check out its earnings growth also. And technology stocks tend to be high growth stocks more than non-tech stocks. So if we could find some technology stock that had first positive robust earnings growth and then went up after a pullback, that would be the best time. It's very similar to Zoom. Currently it is overvalued. it has 2 quarters of positive earnings. Before that, it was negative or no data. So if I now look back on the technical charts, Doku, this was one earnings, this was one earnings. As Rick mentioned, there was no earnings yesterday. That jump was due to Zoom going up. So if it had 2 positive earnings earlier, that would be these 2 earnings. Earlier, the result was probably not positive. At least Thomson Reuters data is not showing anything about it. So one time to buy it would be when the first positive high earnings growth came out. Let the stock pull back. It pulled back anyway and then go up. When the weekly turned cyan, from that time we could look for a buying opportunity in the daily chart. That would allow us to buy the stock, which would then have potential to go up a lot more if the earnings growth followed, which indeed happened at this point, and then it shoot up further. Yes, seen, all penny stocks. I bought a small, there is a question from Mike on SYN. The spread is not good. It is a penny stock, and also penny stocks, even if the spread is good, it may suddenly go up 50%, go down 50%. It's a biotech, and it has number of stocks in trial, phase 3, phase 2. So I just parked some money in that stock from some of my profit. So even if it goes bust, it's okay. My profit will reduce. Not okay, but it's okay. I just tried it out once. Doku is a very strong company. Yes, Rick. Goodbye. Goodbye. Very good. Next time, let us try to spend more time analyzing few stocks you are buying or deciding to buy, so that I can also, and we can all learn from each other. And I will continue to use Q techniques, but I may find newer mechanisms like how Rick bought Doku. I would have probably bought it on the cyan candle if I heard from Rick earlier, but it is a strong stock anyway. I know about these stocks, all HGSI and IBD stocks. Traders are aware of these stocks. Very robust technique, very good buy. I am almost done with the changes on the stock page. It's not released yet. Some more other changes are to be done, enhancements to be done. But let me just briefly mention again, these will be the inside categories and then the smart filters. The difference between the inside categories and smart filters, there are few. One is the inside categories. When we select them, that is the star candidates, trade candidates, high growth, undervalued, high pressure, and simple going up. When we click any of the inside buttons, then it will first go to cache, get the latest data, and then show us the result. And the smart filters, they don't again go out to cache. They work on the data that is already here. That means I may use this inside category stocks going up, and instead of getting only the 10 top best performers, I am now getting all the stocks properly ordered. It's already sorted by performance. And now I may apply smart filters. So I started with a inside category that is simply going up, and these are the stocks going up, properly sorted. And now I may apply smart filters. Smart filters will not go to cache because I have my intended stock list now. I am just applying smart filter. So if I now apply the smart filter for value stocks, it will narrow down my stock list. If I apply the smart filter for last quarter earnings growth, it will further narrow down my list. That is how we can start with the inside categories that will give us not only 10 stocks, but all the stocks properly sorted, and then use the smart filters to further narrow down. Now the reset buttons are still there. So I applied two smart filters so far, the undervalued stocks and last quarter earnings growth. Each reset button will reset that smart filter. So if I click this reset smart filter, then you can see the filter on last quarter earnings growth is gone. The valuation smart filter is still there. If I reset that, now the valuation smart filter is also gone. Of course, I can always click the refresh from cache also. So the intended way of using it is that you may start with any of the insight categories, from the simplest one that is simply going up, simply going down, or to the most complex, that is star candidates. And then if you require, you may apply the smart filters. And now you can see, if I refresh again, try and show, any filter you apply, whether the insight categories or any smart filter, it sorts the data automatically. In market hours, it will sort by real time. Outside market hours, it will sort by 1-day performance. Intelligently, it knows. So if I am looking for stocks consistently going up with 3 quarterly earnings growth, you can see, because it is a bullish smart filter I applied, the data is automatically sorted. The best performer came up. And in a particular category, I don't need to reset before choosing a different filter. So far, I have applied the 3 quarterly growth positive filter. Let me change it to 2 quarterly negative growth. And you will see I don't need to click the reset button. Now it is showing me all the stocks down with 2 quarterly earnings growth. And because that is a bearish filter, the data is automatically sorted accordingly. Makes life much more fun and easy. Very intuitive and very fun to use. The same changes are also there in Q Vital and Q Index. I have not opened that. So I will try to release them out soon. They will make life even simpler, and you will be able to look for nice trading candidates, low risk candidates, even faster. And I am sure it will be more fun. We are at the 1 hour point. Thank you very much for attending. Very much appreciate you joining the calls. I look forward to seeing you in our next session. Have a good day, keep safe, and trade profitably. Thank you. And Rick, yes, I will look at the link you have mentioned. Thank you. Thank you again, everybody. Take care. Bye-bye.